Good evening, everybody. I hope you're having a wonderful Tuesday. It's going to be another Taco Tuesday for myself. If you're out there and it's Tuesday, I hope you guys get some tacos in you because it's Taco Tuesday. All right, enough about the tacos. Let's go over what occurred today in the markets. Let's go ahead and review. It's going to be pretty quick as I did not really trade today. I did take one trade early on in the day and basically broke even on it. Didn't really do anything after the fact because I didn't know what the market wanted to do. No trade is a trade, believe it or not. So having no position is also a position. Um, that's one thing you're gonna have if you're somebody who trades a lot or somebody that's learning, or even for myself, for whenever I sometimes go back and watch my own videos, it helps me understand and learn a little bit better. But you don't have to take a trade every single day. Today was just there was no A plus setups, um, or just setups in general that I truly enjoy taking. But I feel like my risk to reward is a little bit on the more defined side, and I'm more comfortable and confident in what the market's trying to do. Um, with that being said, I only took one trade today. That was in C period. That was after we had created a bit of a trend day up, had single prints in B period. So we had created an area where shorts, covered. At the time also we'd had a lowest accepted price. That's when like B period opened, immediately pushed up, didn't look back. So we had a few things that were looking in buyers' favor. But of course that was after. So we had some mixed market generated information. So in A period, let me back it up a little bit before I took that trade. In A period, we'd pulled back, took out the previous low day, and we had filled the gap, that December contract gap that I've been talking about, 38.25.75. We had just missed it yesterday, and then today we take out the two poor lows, the daily low, and then we fill that gap and get below it by by about 3 points, and then we come back into previous day's range. There's a pretty good taper down here at the bottom as far as volume goes. There wasn't a whole lot of volume on this push down, and you could have taken a trade against that and gone back to the long side, or waited until you got back into the day's value, or not value, but previous day's range. And once you did that, you knew where your defined out was. You could have taken a long as soon as you got back into previous day's range at 38, 27, 28, or excuse me, 25. I don't know why I have 28 there, but 25. As soon as you get up through that area, take the long, and you have your out back at the low of day, so you're risking 5 points. You take the long, let this bad boy push up, and then you have your targets set maybe at M's high or at the afternoon rally high if you're looking for a bigger reward. But the risk there was very minimal, and you had a good entry to the long side. Well, I didn't take that trade. I didn't take a trade until after A and B period were established, and then I took that trade in C period at 59, after we had created this little bit of a trend day. So B period starts one time framing up. I'm thinking, okay, they didn't get much below the previous day's low, didn't find acceptance or acceleration down that way. Maybe we get a little bit of a short covering into the afternoon rally high, and then potentially go and test the previous day's high, as well as put the daily back into a balance. That's kind of what I was looking for. So after B period closed and C period opened up, I decided to take it long. I was in the money initially, pretty good. I could have taken it off at 65. I actually had a contract ready to sell at 68, and then I wanted to hold and see if we could rotate slowly, and continue to trend at one time frame up until 38.8350 at the previous day's high, but that did not happen. So once it started to come back in, I got out basically break even on that contract, on both contracts, because I didn't get my 68 fill, and then obviously we didn't trend up and go and get that previous day's high. However, had I been a little bit wiser, I could have taken one contract off, or I mean, it would have been the small gain, but a good gain nonetheless. I could have taken off a contract right here at 38.6275, the afternoon rally high. Um, from yesterday. If I would have taken that trade off right there, I could have gotten out for a little bit of a couple point gain and then stopped out break even and still would have net, a couple bucks on the day versus nothing at all. But overall, I'm happy it's better than losing money on the day because in D period, I know there were probably a couple people that got short as they began to buy against this set of single prints, thinking that we were going to hold. But we had a pretty hefty liquidation break in D period. We pulled all the way back down to the opening, and kind of stayed there for a little bit. And then E period did the same thing as well. We traded back and forth through the opening in E before slowly rotating back up. And after that point, I just kind of decided, all right, there's no trade for me. We couldn't go trend, didn't want to hold trend. We couldn't get below the day's low and continue down to the downside on for the daily. So I was like, there's nothing here for me to trade. Seems like it's going to be a rotational day, which it was, as we ended up with a uh, 10 wide, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yep, 10 wide pot or 10 wide point of control at 38.56. Um, but nothing here for me to trade today. Could you have taken trades on the rotations? Yes, you could have. You could have taken shorts against C's high, had your stop out by a couple of points, so you could have been taking shorts against that afternoon rally high and C's high up here. We'll label that red for you guys real quick. Let me label that red so I can just kind of give you guys an example. And I'm sure you could see this on the 5-minute chart as well because I plan on backing this thing up to the 5-minute and just showing you guys real quick. But yeah, you could have taken the short against C's period high, C and afternoon rally high from previous day, which would have been a great short opportunity here in I period because we got above C's high, which was 38.65.75. I period's high was 38.66.50, so not even a full point. We got above it and then backed off, back down to the point of control, which was at 38.56. So from 66 to 56, 10-point rotation down. And then if you're looking to come back all the way down to the lower end of this, where value low and half back was, if you don't know what half back is, it's my dashed line here. It's just a halfway point of the high day of, or the high of day and the low of day. Halfway point tends to be a pretty good destination for people. Uh, and you could have been taking longs against that and out below it, right? So we'll label this green, and then I'll show you guys on the 5-minute chart here in just a second on what this could look like. And people do really well trading the rotation on rotational days like this, where you're, shorting at the highs, letting it come back down, buying at the lows, and letting it come back up. For me, that's just not the way I trade. I like to trade trend days better. Days out of balance tend to be my better days versus where things are a little bit more mixed signal. So I tend to stay out of them. But let me show you guys on the 5-minute chart what this day could have looked like. So this is our 5-minute chart, and you can see that every time we'd pull back into this low, we got a little bit of a bounce. And then every time we pushed up into this area up here, you got to pull back, right? So you had your supply up here, had your support down here, right? And clearly, those were the types of trades you could have taken throughout the day. But for myself, it just was not the type of trade because this was a whole lot of chopping, in my opinion. Bad risk reward, nothing there for me to trade. Let's go back to our 30-minute and let's look at. So those were the opportunities throughout the day. It wasn't like there wasn't opportunities to trade, just not the best risk reward in my opinion. So let's review what occurred. Just real quick, a recap. So A period takes out previous day's low, which means we continue to one time frame down on the daily because we take out the previous day's low. Same thing like with a intraday 30-minute time frame. Like in A period, we took out that high in B, so we started a one time frame up. Same thing happens On the daily, when you take out the previous day's low or the previous day's high, you either one time frame up or one time frame down if you're trending. So we took out the previous day's low. We are one time framing down continuously, back to back, but we didn't get much today, as today was a bit of a P shape for short covering, and you can kind of see that here in the profile. It looks like a little bit of a P, right? Here's the stem, and here's the P, right? P shape for short covering. We push up, we get the afternoon rally high, do not get much into it. We also had that one tick of single prints that we filled early on the day, rotate up to the afternoon rally high, don't get much above it, much acceptance above it, and then we just stayed rotational throughout the day. So as far as destinations go, we have today's low down here at 38.22.25. Today's low day, 38.22.25. Low day. Today is the 20th. Almost Christmas, guys. Almost Christmas. Then we don't have an afternoon pullback low. I mean, I guess you technically could call G period an afternoon pullback low. Um, so we'll label it. Nothing, I wouldn't really lean on it, but because halfback is there, it's a pretty visual area, so we'll say afternoon pullback low. It's not a textbook afternoon pullback low. It's just a visual area where we kind of pulled back to and then didn't really see that price again. We attempted to an L period, but we didn't see that price again and bounced. So afternoon pullback low. Then we have our 10 wide point of control up here at 38.56, otherwise known as a mean, like a 12, 20, oh, actually. So 10 wide point of control, and then we have today's high of day at 66.50. So these things being labeled, let's review what the possibilities are. Because we are one time framing down on the daily still, uh, if we open up below our afternoon pullback low, then you look to get to the previous day's low or today's low at 38.22.25 and take it out and then get some extension below it. If we open up above the afternoon pullback low, then you look to trade up into the 10 wide point of control at 38.56 and then go get today's high day at 38.66.50, which then would put the daily into a balance, and we would probably call it a 4-day balance using the 16th high and then today's low as our balance area. So, but however, if we open up above the 10 wide point of control or today's high, and then we don't find much acceptance above and fail to take out the 19th high at 38.83.50, then you'll look to rotate back down to the point of control at 38.56. So say we open up just right above here at, let's just say we open up at 38.66.50. If we open up there and we push up and we fail to take out that high a day and we start to rotate back lower, because we hadn't traded there at 38.56 and that is a mean, you'll look to have like a bit of a mean reversion. You could take the short to come back down into that 38.56 because it is 10 wide out of 13 time frames. Pretty strong area. Price is attracted, algorithms are attracted to that area. You may see us trade at that point. If we open, however, if we open up inside today in today's range, then you just look to trade the edges. Very rotational. Probably another day of that if that happens, but I'm not looking for it. Let's look at the larger time frame and get out of here. Larger time frame. I'm just going to review the weekly and the daily. We all know the monthly is in a balance. As you can see, we are in that balance. I have it pulled up here. So let's review the weekly inside that monthly balance. Weekly, still one time frame down. We set another new low on the week today, but didn't get much extension or volume below. Daily. Daily, continuing to one time frame down. We look tomorrow to see if we continue to one time frame down, which would mean we take out today's low of day. If we do that, then your next destination for the daily low is here at 37.53, or excuse me, 37.51.50 is the next downside destination as far as the daily goes. We get there, then you continue to one time frame down. However, like I said, if we open up inside, take out today's high, you look to put this thing back into a 4-day balance and potentially test the 50-day moving average at 38.8346. We'll say 38.8350 to keep it rounded up here. Um, and then from there, potentially back test the balance high, which I'm kind of predicting here. If we take out today's high, put the daily into a balance, we look to back test the balance high, which I'm using the 16th high of day, and then the 9 EMA here at 39.2250. So, with that being said, ladies and gentlemen, do we continue? Actually, oh, another note, real quick. Another thing that kind of cracked me up into something that's a little noteworthy. We've been setting lower highs and lower lows all year long, right? Struggling to get above the 200-day moving average, and Jim Cramer comes out today and says the Santa Claus rally is still in play. There's still a potential for a large bounce to the upside. And, in a way, he's not wrong in the sense that if shorts begin to panic and cover, this market could rally really heavily. Because these pushes down really haven't been too heavy. However, looking at things like Tesla, where the market's been, pushing it lower and lower and lower, and volume's been relatively heavy for Tesla, I would have to assume that hedge funds are starting to get out of that name. They're probably rotating out of other names that either A, to protect their gains on it, reduce their positioning in it, get to cash, and see what happens in the coming months to year. So with that being in mind, Jim Cramer's full of shit. Pay attention to the charts and let's see what happens. With that being said, ladies and gentlemen, we'll catch you in the next one. See ya.